Good afternoon, traders. It is Sunday evening, the 25th of September 2022, and I'm recording this for the week commencing Monday, the 26th of September 2022. So just having a look at any sort of high-impact news that's scheduled this week, please be aware that there is an Italian election underway now, and there are some concerns valid concerns, of course, of, as you know, fascism on the rise, and Italy having been I want to say, a home to that in the past. The concerns that a conservative right-wing party is likely to come back in power, and so there's this is just a general threat to democracy around the world. So only bringing that up because there's an election, and we'll see how the euro potentially responds to that when the results come out Sunday night, potentially through to Monday. So just aware of that. We also have President Lagarde speaking ECB Monday 2 p.m. So it could be some increased volatility. Mondays can be a bit twitchy anyway. We've got Powell speaking on Tuesday, and I think really the consumer confidence. There's if there's any concerns to do with inflation, possibly, or how that's impacting us, that could show up on the US dollar news on 3 p.m. on Tuesday, UK time, that is. We standard Fed Chair Powell speaking on Wednesday, not too concerned about that. And really, that's pretty much it, with the exception of, let's call it Friday, with a price index stuff coming out. And so those are really the things that the market's going to be most sensitive about at this point in time. Let's go across and have a look at the markets. So this was a beast of a week, right? Across the board, lots of big things happening. We had an incredibly strong move on the dollar index here, so you can see it having pushed through, and there's just, taking its history into account, it's obviously relatively quite overextended, I believe, and we've got some highs here around that 120 mark. We're sitting close to what have we got here? Sitting at the high of 113, and so yeah, of course, are we overdue for a retracement? Of course we are, but the market is just appears to be that it's just going to keep pushing, so we're going to have to see how that goes. What I'll be looking for in the earlier parts of the week, certainly on the lower time frames, let's call it the 4 hour, I'll be looking to see if price is going to start to show a bit of divergence on that 4 hour, starting to pull back. But you can see here a little bit of divergence coming through on the MACD. But until I see some really strong rejections here, I'm not going to take that too seriously. You can see it's overextended on every single time frame, and it is certainly due for that. But at the same time, the market is just really, it's quite serious about where it's pushing through. This can now be removed. We can see euro dollar pushed a little bit lower, and we can see big overextension to the downside, heading down towards 0.96, far away from parity at this point in time. And that monthly is also relatively overextended. Interesting enough, when you just kind of look at the history here, I remember in 2014, 2015, I remember this dollar just kind of breaking through. Prior to that, it was sort of a little bit range bound above 1.2, and it just did, it just started out around about December, January, worked its all the way through, and then we were stuck in this range for actually quite a while. And it's just a very similar sized move. It's taking slightly longer, but it also has the potential to go down a lot further, even down, possibly down towards 0.9. So quite a bit further that it could conceivably go without taking a breather. To my mind, that's the kind of thing that's very extreme. Shouldn't happen very often, but I want to be prepared for that. What I am going to be looking for, as I said, is some sort of pullbacks, possibly showing a bit of bullish divergence, which there's no sign of it yet. Looking for pullbacks and looking for trend continuations to the downside, until I start to see bullish divergence creeping in on, let's call it the 4 hour. That's when I would largely expect a potential change in trend to come. So for now, my position is more bearish than bullish at this point in time. Beg your pardon. Let's get this back up to the daily. And so I'm going to take that same approach across to, cable as well. Sterling just fell off a cliff. This is just an absolutely gargantuan sized daily candle. You can see here it's that was 435 pips. Just a really, really massive day for it. And it's, again, also very overextended. Now the lowest kind of in the data that I have, this is sort of the lowest point it's ever been. Weakest against the US dollar. Very unusual times, guys. Please be aware that a lot of this is driven by the stronger dollar. We have global inflationary issues. We have a war going on that is on another level, is a threat to the entire planet. So although it isn't officially a world war yet, it kind of is in the back channels. But because the danger is there, we've now got, we have a nuclear power that is threatening to launch that kind of stuff. So where I'm going with this is I'm saying the markets are generally under stress, but although there are some kind of the pound is doing its thing, the euro is a bit weak here and there, the pound is weak here and there. The other thing that's happening is the dollar is the principal driver here. So we need to just remember that if the dollar decided to take a breather now, we would see very different looks on all these charts. It isn't just sterling, and it's a habit. Often if you live in the UK, you think, oh, well, it's all about the pound. And if you live, in the US, you think it's all about the dollar. In the case we have now, it's mostly about the dollar. Looking at Aussie dollar, US dollar, you can see also breaking lower. So now what's happening is we're starting to become overextended on multiple time frames. There is no sign of bullish divergence on the 4 hour. That would be the first place where if we are going to get a daily retracement, that's probably the first place I would expect to see it starting to form, is on the 4 hour, which would then become a retracement on the daily. All right. So in other words, what I mean by that is my expectation for this week, for the early part of this week, for day trading purposes, is to still look for shorting opportunities on the 1 hour and 4 hour, even though we are overextended. At some point, I do expect us to have a correction to the upside, and we'll be prepared for it. Could be on the back end of the week. We'll see how it goes. Then having a look at Kiwi dollar as well, same thing again. So nothing here is really a surprise in terms of the fact that we could see that the dollar is driving it. So we could see a lot of those majors against the dollar looking that way. Now again, interesting enough, usually the first chart here that I would have expected to go sky high was dollar yen. And as you may or may not know, Bank of Japan decided to intervene last week. So they've got to a point where they're a little bit concerned about a weaker yen. They've intervened, but you can see it's almost immediately recovered. So which is interesting because quite a few of the other yen crosses, pound yen or euro yen, we did not see that same recovery. In fact, those markets have started to do a bit of a correction to the downside and might provide some much needed sort of relief on a lot of those yen crosses, but not dollar yen. So dollar yen is the only one that's still attempting to maintain this trend and come up and test these levels. It's still within range, and so I'd exercise some caution there. Dollar Swissy as well, you can see that stronger dollar coming through and just pushing it up through to a level of resistance. That's where we are now. Question is, will this level of resistance hold? It's not guaranteed, not the way the markets have been going. This is very unusual. So if you've been only sort of taking on trading in the last 1 to 2 years, you might be thinking that this is standard. It's not. I've sort of been in this area for nearly 13 years, actually nearly 14 years, and this is the first time I've ever seen this, and the currency markets have really only been in existence for retail traders for about 30 years. So we're sort of halfway through that, and I've only seen this happen once. So this is not normal. Okay, it doesn't mean we can't take advantage of it, but it just also means that we shouldn't be thinking that this is normal if you're a newer trader. Dollar CAD, you can see pushing right through that, also very, very overextended on multiple time frames. Finally managed to break through and push on there. It's also coming up to some major levels here. And so a lot of these markets are at some point going to have to take a breather and pull back. Dollar ruble, look at that. It's a bit of a spike. I need to check if that data is right, but also a bit of a spike there as well. And let's have a look at EURUSD. So also we had SNB starting to twitch a little bit there as well, also wanting to intervene a bit and push back. But again, here you can see the market push down. We had that reaction, the market sort of crept back. So this has happened in the past. This is where we kind of get some of these, when we look at some of these biggest reactions in the past, that's where you had it, where the market, S&B threatened to intervene. They're not happy about where certain things are going, and the market sort of shrugs it off and keeps going. And so it does increase the risk now. These kind of spikes might potentially happen more often, and we might get some bigger moves. So just exercising some caution there. Then have a look at gold. Gold fell through a level of support here. It's now pushing down towards this 50-period moving average. We've clearly created sort of lower highs, lower lows. We're starting to look more and more bearish. I think it's worthwhile having a look at it here on a longer period, so sort of a quarterly. Let's see where we are there. We've broken through a level of support. We're coming down, potentially down towards that 20 moving average. So we've got some possible room to move down towards, let's call it 1600 possibly. Anyway, just interesting to see that happen with gold. It always comes as a surprise when we see gold head lower than people expect it to. They always think it's going to keep going. And I remember it doing this actually in the past over here. We never expected it to come down here. So it's always a hard thing to accept. But yes, it does appear as though it's intending to head a little bit lower here. Silver, interesting enough as well, also starting to push back in towards these old highs. Might still find a base there, but also looks as though it's starting to slip below that level there. Let's have a look at copper. Copper already starting to push a little bit lower here. It's got a downtrend on the weekly, downtrend on the daily, pushing lower. So I expect this to come back down towards these lows. Let's look at natural gas. Natural gas coming back all the way down, plummeting all the way back down. This has just been so volatile, obviously, with everything that's going on. We've got crude oil, which is starting to creep lower as well. So again, what is the one thing that unites a lot of these that could possibly explain a big move to the downside? It's that dollar. Okay, again, it's the one thing that absolutely is capable of moving all of these at the same time, especially when we get across and have a look at equities. Okay, so in fact, it's the only thing that can create that that impact when you see it, especially in the same week across every single chart in the same direction. So again, it's also pushing lower. We're starting to see. So this week's going to be interesting to me. Will we kind of slow down, calm down? Will we recover? Will we push back? Will there be a rejection? All of that, those are possibilities, but we're going to have to find out. Okay, so you can see a Brent crude also starting to fall through that trend line. So that's good. I can get rid of that. Just showing that it is starting to head low. So reasonably expecting most of these to come down to the next support levels makes the most sense. Sugar. Testing its levels over here. Could break through soon, but at the moment it's just still range bound. We could see coffee didn't really do much over the last week. Let's have a look at wheat. Struggling quite a bit over here. It has produced that swing low. Could potentially start to push its way up. It's not struggling as bad. You can see the daily here came back down to test these old highs. So this week I'd look to see if we get a bullish move to the upside. You can see last week we produced that bullish candle. We did not break above the high, so the next week was lower, but then we did push higher. So we've kind of, it's very choppy, but it is generally following to the upside. So I expect it to try again this week to do the same thing. Cotton. Coming all the way back down towards these lows here. So we're just seeing it's a generalization, it's an oversimplification, but we are seeing just a reduction, a drop in commodities as well. You can see here as well, looking at the the global indices as well, we see those starting to drop down. So we've broken through that 30,000 level for the Dow and heading down towards 29,000, which is also the weekly 200. If that is significant, we'll see, but it is also the monthly 50, and that could well be the case. I do have a level here at 29,000, and I have another level at 27,700. So I want to see if we have a bit of a bounce or recovery from that. Look, if we do end up, let's say a week from now, we've recovered across the board, we've had a big push up, then we could see something, then the picture changes. Look, the other thing that's worthwhile mentioning is that September is historically known to be a very bad month for equities, but not necessarily for everything else. So what we're seeing here seems to be driven more by the dollar and that sort of inflationary sort of sensitivity than anything else. S&P and the US indices are pretty much the same thing. I've highlighted this blue area because we're coming back down towards these lows. We're still in the same area, so we haven't necessarily broken to fresh lows. We were here in June. And the question to me is going to be, does this level hold? Do we get a double bottom here, or do we start to fall through? Because when we fall through these, and it'll be the same for the Nasdaq as well, then we're starting to explore possibly that, or at least the very real possibility of another big leg down, which will be obviously quite scary for the markets. It isn't guaranteed. I'm saying it's a possibility, but assuming it's going to be the case and then deciding to short the market because you think it's a sure thing, that kind of stuff is probably not the way to go. Mini Russell 2000 as well, you can see starting to push these lows. They're starting to close near the lows, and that's not a sign of strength. Here you can see, for example, we get these nice wicks on the weekly. Here we got a rejection immediately followed by wicks and pushed away, but this time we're getting that close near the lows. Could be something like this. We could have a week here followed by another bullish week up, but overall I don't like it closing near the lows. That's usually a sign of weakness, and that implies that the momentum is going to stay bearish and head lower. You can see here, for example, looking at it on a monthly basis. So let's just reduce this down. You can see here a nice bearish candle right near the lows for the FTSE and actually at a level of resistance. We can still come down comfortably towards 6,700. I don't think that changes the picture drastically, but I think the next thing I need to highlight at this time is that so far we're seeing this. This is global, ladies and gentlemen. This is global. It's not a sky is falling moment, believe it or not. And let me make a case in point. We were here in December. So we're not, when we talk about these numbers, even if we drop through there, we drop through there in March, and that will just put us potentially back in where we were a year ago. So I'm just illustrating by saying that some of these moves, although they seem potentially quite dire or they're scary, some of them are just putting us back a little bit of time. They're not putting us back 20 years or something like that. So not at this time anyway. Depends what you're talking about, I guess. And here, I think worthwhile mentioning the DAX here breaking through a new low on that weekly, coming back down towards the next level at 12,000. Certainly not looking strong. And there, I would say at this point, a lot of this is now potentially fear-driven. Don't forget, there's still some good jobs numbers coming out in some areas, and we are starting to see hints. There is always that concern. Ray Dalio talking about it, Michael Burry talking about earnings compression. So there's the fears of that, and also everyone's scared of recession and so on. But remember, don't forget, as I said last week, good way to think about recession is it's a really quick way to reduce inflation. So we might find, I'm hoping, obviously, I don't want to use the term soft landing, but I'm hoping that it won't be too bad. But of course, I'm not I wouldn't be surprised if the markets panicked, because panic is not something that we can necessarily stop them from doing. Okay, also bearish monthly candles still forming over the Nikkei. I looked at China 30 as well as Hang Seng, and they're all very, very bearish. They're actually the weakest of the bunch. The Australian ASX here also coming back down towards the low. So this is the theme we saw follow through last week. We saw all the markets starting to head lower. We saw that dollar just take off. But sometimes a big takeoff like that is the move. That could just be the move, and now it's going to slow down. Not saying it is, I'm just saying sometimes we call it a crowd candle. The big candle is the move, and then we get a bit of a recovery. Let's see how that goes. Moving on to equities of interest. Glencore holding so far. Not looking terrible. Interesting to me how the weekly and the daily look so very similar in terms of the candles. Coming back down towards these lows, struggling with 501. That's okay. Tesco continuing to push through. Okay, but this sort of makes sense. If you're living in an inflationary period, you're going to, especially certain types of shops are going to see those numbers drop. We'll see how that goes. It's back down to the 50-period moving average. This is interesting to me. Should we drop below the 50-period moving average, then we start to look at a potentially different picture, but we could bounce off it. We've, come back and test it and recover from that. So let's just see what the outcome is. But don't forget also this week is going to be our, this is going to be the final month of September. So we want to see how those monthly candles finish. And I think if they close near the lows, that looks possibly bleak for, as we head out towards, or as we run into the final quarter for the end of the year. But if we do get a bit of a recovery from that and we don't finish bearishly, that's also not necessarily a bad sign. It does mean that momentum has taken a bit of a breather. So Amex just saying bearish here at this point, looks same as last week, looks like it wants to continue heading lower. Apple not falling as aggressively, but also looking relatively bearish here. It looks as though that wants to keep testing those lows. That's interesting to me. Will that level hold? We'll see if that's going to be the case. ARC Innovation also back down towards these lows. So for now, it makes sense just to see it come back down to the lows here, not necessarily through them. Depends on how the week is. And this last week, to me, I would say I would qualify it as a brutal one. On a 400 pip, candle on cable, that qualifies as brutal. We saw tempted interventions on Japanese yen and Swiss francs, and the markets shrugged it off in many cases. So it means that the momentum is kind of almost very difficult to turn around, but it could be the beginning of the turnaround. We'll see. Okay, AT&T back down towards these lows over here on a much bigger picture. Still within this, to me, still acceptable, but also let's see if it can hold above these lows this week. Berkshire Hathaway starting to break through here. It's still arguably, I could argue that it's got the lows of June still might count, but overall it's going to be testing that. That's what these are going to be tested for. BP, these ones are actually struggling, and again I find it interesting because that strong correlation between them and crude oils, for example, or at least energy, if you want to call it that. They will take the same pressure. So if crudes drop, they'll drop. It'll be, when I say they, I mean BP and Exxon as well, coming back down into this area. Remember that we broke through all these highs over here as resistance on the monthly, went up to these highs here as well. So at any point here, we can come back and test it and potentially find support. Coca-Cola, obviously being a big component of Berkshire Hathaway, is, unless you're a dog and it's Berkshire Hathaway. Okay. Anyway, so here we could come back and test these highs, still be acceptable to my mind. So that 56.50 quarters is going to be a relatively important level. Let's go back to FedEx. Wow, FedEx obviously taking a bit of a big move down. And that is potentially now going to start to explore down towards these 110 levels. Then we've got General Motors. I think we can get rid of this stuff. I'll do that later. Okay, very nice bearish engulfing candle here on the monthly. That implication, if it closes near the lows, that's going to continue to head down throughout October. Let's see how that turns out. JP Morgan Chase also right near these lows right now, and I think psychologically could be quite interesting to see if it can hold above that. Mets is just going to keep breaking lower, so that's not really, strictly speaking, a surprise to me, but it's not alone. There's a lot of companies that are pushing those lows. Morgan Stanley overall has been doing really well, but these two candles here imply a move back down towards these lows here for now. See if this level can hold, if this becomes an inverted head and shoulders, but I'm thinking it's more likely it's a sort of a 60-40 that it's going to head lower. Netflix struggling to get back up here, really can't seem to get past. You can see the level of support held here in 2018 and 2019, and it's testing that again. Can't seem to quite get above that, and I'm not expecting it to at this point in time. NVIDIA breaking to the downside there. And so makes sense for this to sort of just potentially come down and just tap at that level there as well. PayPal also not looking super strong. Unfortunately, not looking that way. Let's just see if we can get in house. 25 looks okay for now. Spider also looks as though it wants to continue low. So basically, a lot of this, I apologize, but a lot of this seems very similar to last week. Are we overextended? For example, a move like this is quite aggressive. And obviously, we look here on the weekly, we can see it sort of starting to push down towards these lows. And yeah, on that monthly as well, starting to drop below all these lows here, Spotify. So they're it's interesting. I mean, I use Spotify on a regular basis, but yeah, we're going to have to see what happens to that. So something that might be interesting in terms of if you have spare cash and you want to put some in towards these, that's interesting because these kinds of discounts don't come along too often. And it's a technology-wide thing as well. It's a global market-wide thing. And of course, don't forget that also the one component of this that you might not be aware of is China. Fear of contagion from China's economy, which is weak at the moment. So US economy is relatively strong. We'll see how, compared to a lot of other countries, we'll see how that goes. So that's thanks largely to how well the Democrats are running things at the moment. So Tesla, because you're always going to get inflation. You're always going to get a correction when the market does. It's been running relatively well for the last couple of years. You cannot avoid it. So it's going to happen with whoever's in power. So the question of this could have happened with any party in particular, but the ability to not have the market completely cave is where I'm saying that they're running it relatively well and managing to reduce their deficit. And actually so far also looking at different stimulus ways, but they're also making sure that it's not from the top down. You may recall 2007, 2009, when it was kind of bailing out the banks, and then everybody else got kind of screwed when they defaulted on their loans. And so this is not really the approach that they would take these days, which is smarter, and it's the way it shouldn't be. You shouldn't bail out the top and then screw everyone at the bottom. Obviously, that's a ridiculous thing to do. You need to try to stabilize the entire system. And China has a similar issue, by the way. I'm not just trying to make this about the US or the UK, but it's a similar thing. We need to try to keep everyone from panicking or getting into trouble because it impacts everybody. So Vanguard, we've got here as well. We've got them starting to test near the lows. Very similar picture. So I kind of feel like it all looks very much the same. And I don't expect the bonds to change. Treasuries at this point, I'm still expecting those to continue to head low. Yes, they might just do some retracements, but for now, I'm sort of maintaining as a trader, those are continued shorting positions. Overall, it doesn't look very positive. But here's the thing, right? So kind of wrapping this up towards the end, I can sort of keep you an eye on the time. When we start to see green shoots here, so we've got a nice little green monthly candle here. Because we look, the first attempt here, we had, this is very common in a lot of charts, but the first bullish candle here that we didn't trigger and it broke down, that's usually the first clue you're going to get a deeper correction. The second one should normally have been a deeper correction, meaning we kind of should have been able to recover from that. And we didn't. We started to break below that now. So that means, yes, we're now into potentially a bigger kind of, this is very much, if you haven't looked it up, it's fascinating to look at. Michael Burry's been talking about this stuff for ages, and he really has, and Ray Dalio as well, they've predicted very much this being the case. Ray Dalio is saying that, look, if it's managed correctly, it might not be as bad towards the end. Really just saying that there's a knock-on effect from the initial stuff over here that we then get a secondary kind of wave, and therefore, but the secondary wave is not necessarily meant to be a bigger drop, a bigger leg down in the markets. It could be a smaller leg down, but there's kind of a wider thing. We have debts and stuff, global debts that have to be resolved, and all kinds of other problems that we have to deal with and pay attention to. So I guess the message is we're going to have to start fixing those things. So here, really looking to this extend its way down a little bit for now. Let's have a look. Again, I looked at the 10-year T-notes and Eurobonds as well. All of these things coming down here. We're going to see these possibly extend a little bit further. But we've had a really big part of the correction happen already, in my opinion. So I'm curious to see how much further it can keep going. But yes, it makes sense to understand the market can always keep going either to the upside or to the downside. Finishing off quickly with cryptos. If you've ever watched any of these weekly analysis, you know by now what I'm about to say, which is that the cryptos are integrated with equities. They're now seen as an extension of possible assets to put money towards. And, the people with real money could potentially outnumber the people who love the product. But, a lot of people love cryptos, but they don't necessarily have money to put into it. They don't necessarily move the market. So I guess what I'm saying here is that cryptos I will be the first person to highlight if cryptos manage to recover ahead of equities. I just don't, at this point in the history of cryptos, don't think that there's enough of a market for that to be the case. So my expectation for now is that cryptos, unfortunately, will take exactly the same beating that equities do, and they will recover, at the same time for now. At least for this next week, that's my expectation. They're going to be under just as much pressure. And so if the rest of the markets fall low, we're going to see that happen here. And this is setting up. Look, Ethereum here as well also looks as though it's getting ready to do another move back down towards these lows. Cardano back down towards these lows. That's just what the price action is looking like, but it's looking like that across almost every single asset class as well. Sort of sounds very depressing. I don't want it to be depressing. I would rather do this so I can know when it's starting to change. What are the things I need to see? I need to start seeing more bullish candles coming up the bottom. Yeah, for example, clear bullish divergence. Okay, so what does that mean? It means the market is not falling as fast now as it was over here, which means it is starting to slow down. But not every instrument looks that way. But I need to see more and more of that. So that implies that we could see some bullish reactions coming. And I hope that that'll be this week rather than, the next week. But September's are not always the best months, and we'll see how it goes. So I guess in summary, what I want to say is remain optimistic. But and be prepared. I think that the sentiment for now, especially after the last week, after it being so brutal, is more bearish. But it isn't always going to be that way. It really isn't always going to be that way. We will start to see bullish recoveries, and it'll not be when we expect it to. It's not like the week just suddenly becomes bullish because we're in a good mood. Usually, the market starts to recover, and then we start to feel more optimistic. So there's always a lag. That's it. So, ladies and gents, please have a good week. Look after yourselves, and I will see you next week. Thank you.